We might see some further cuts in the interest rates, some expansion of quantitative easing, but the weapons arsenal, so to speak, of the Bank of England is coming to an end.
So Kai, today we'll be taking a look at the implications of the Brexit vote on the UK economy. And before the referendum, the outcome of the UK economy was very mixed between vote Remain and vote Leave. The opinions were mixed on how the UK economy would turn out if a Brexit did happen. So what has been the outcome?
The outcome of the vote obviously came really surprising because, as you mentioned, it was quite split beforehand. And it surprised not only David Cameron, but also a lot of commentators and a lot of consumers. So what we saw in the immediate aftermath was kind of a shock reaction. And not only did that happen in currency markets and FX markets, where we saw a steep fall in the pound against both the dollar and the euro, but also in terms of consumer confidence, we see that with the CBR YouGov consumer confidence indicator, which fell sharply in the weeks following Brexit. And this data is supported by other sources, by purchasing managers indices or the GfK consumer confidence index.
And you've lightly touched on consumers there. So what is the implications for consumers looking ahead now?
Yeah, going forward, the implications are that there's a lot of uncertainty introduced in the economy, and that has, of course, consequences for producers, for consumers. There's a lot of uncertainty regarding the future relationship of the UK with other trading partners, with the EU, and especially. So, for example, we're based in London here, and a lot of companies, service companies in London have trade ties with the EU, and it's going to be very complicated and a lengthy process to figure it out how this relationship is going to form. And this worsened outlook, this worsened economic outlook, obviously then also reflects on the consumer side. Up until now, we've seen very good labor market data up until the referendum, until June. We have very low unemployment. We have a record high in the employment rate, just the share of people in working age who are in employment. And now, as businesses are becoming more reluctant in terms of investment and hiring, we expect that unemployment will rise gradually. And obviously, inflation is also an issue with the continued low pound.
And what can we expect moving forward from the Bank of England? Obviously, we've already seen some moves and some impact from the Bank of England, but can we expect monetary and fiscal policy in the United Kingdom to actually soften the Brexit blow?
Yeah, this is definitely what the Bank of England has been trying to do. So in July, initially, the Bank of England decided to step back and wait and see how the first surveys come in. And now in August, we've seen that the Bank of England reacted and cut interest rates by 25 basis points to a new record low of only 1/4 percentage point. It also increased its quantitative easing program, which means it's buying government bonds and also corporate bonds. It's also introduced a so-called term funding scheme, which basically means that commercial banks can borrow money at very low rates at the Bank of England if they pass this money on, or these credits on, to the real economy. So this is what we've seen so far. Going forward, we might see some further cuts in the interest rates, some expansion of quantitative easing, but the weapons arsenal, so to speak, of the Bank of England is coming to an end because there's not much more scope for monetary policy. And so this is where we would expect fiscal policy to step in. There are several possibilities what fiscal policy could do. One is a cut in corporation tax to make the UK an even more competitive place to do business. Another option would be an increased spending in infrastructure, especially housing is an issue always has been in the UK. So this is where we think it would have a great impact. And we've also seen that already the new Chancellor has announced that the target of reducing the budget deficit until 2020 will not be met because under the new circumstances after Brexit, this no longer seems feasible.
Right, well, thank you so much for joining us on the line to provide your insights. Thank you.
Thank you.
Well, that's all from us here from the Geneva studios, but if you did like this interview, then please do like and comment on dugoscopy.tv.